Searches for the phrase "when is the housing market is going to crash" are up to 2,450% over the past month. That's when you know that you have to make another video on the housing crash, because apparently the last video we made on the housing market wasn't enough and people want to know more. They no longer care about Dogecoin going to the moon or Bitcoin finally replacing the dollar. They want to know whether the price of their house is going to crash this year. Imagine what happens to all these people who took mortgages only to rent them and create passive income. What happens when home prices crash? Rent prices will definitely fall as well. And that means that rents might not be able to cover the mortgages, which could push many homeowners to sell their houses to be able to pay their mortgages. And if they haven't acquired a substantial amount of equity in their house, the house might not pay the entire mortgage, and that could drive prices down, which means there will be an oversupply of houses in the market, which further could push the prices to fall, which could result in a nationwide housing crash. Oh my god. Dear Federal Reserve, what on earth have you done? You tried to save the economy, but it seems like you are about to create a much bigger disaster. Fortunately, that's not the entire story, and things aren't as bad as they might seem. So let's try to understand what's happening with the housing market. Are we on the brink of another housing crash? Or we shouldn't be worried? Or whether it's the right time to buy a house? But before we do that, here is a little disclaimer. This is not financial advice. Everything that's said in this video is for educational and entertainment purposes. And now, give this video a thumbs up and let's get right into it. Some people haven't realized that home prices are rising at a faster speed since Great Recession, since the 2008 crash. I don't think anyone needs a reminder of how bad that crisis was. It literally took down with it the entire global economy, and the world doesn't need another global crisis after a global pandemic that shook the world, to say the least. Many of you have said that it's unfair to compare current circumstances to the 2008 because we're living in a different time, and the factors that are driving the prices today are very different from what caused the 2008 crash, which is true. I can't argue against that. However, in every single crisis, there are always different factors that lead to the same outcome, which is a market crash. If every crisis followed a plain step-by-step guide, I think we'd have figured it out and wouldn't have another crisis. When home prices are growing faster than income, we know that something is wrong and this is not sustainable. When home prices rise by 15%, we know that it's not going to end well. However, many critics say that the reason we shouldn't be worried is because this time the rise in prices is organic. The strong demand is not driven by predatory lending practices like in the 2008. Banks aren't loaning money to random people just for the sake of maximizing profits. The 2008 crash pushed the government to tighten its grip over the banks, and now it's much more difficult to take a mortgage, and lenders are far more careful. But take a look at this graph. This chart illustrates the monthly supply of houses in the US. We can clearly see that there was a huge oversupply of houses which triggered the 2008 crash. And since April 2020, the number of houses in the market dropped significantly. And that drop wasn't because there was an oversupply earlier, like in 2008, or because we had a tornado or a fire that destroyed a great number of houses that caused such a shortage in the market. Nothing like that happened. We have plenty of houses, but they're not listed in the market. And that's the driving force behind the tremendous increase in prices, which is a problem. We have a listing shortage, not a housing shortage. But let's assume hypothetically, what's going to happen when all these houses are going back to the market? I'm not saying that's gonna happen for sure, but let's just try to think about that for a moment. As of mid-April, around 2.3 million homeowners were still skipping their mortgage payments, and we have no idea how many of these homeowners will be able to keep making their monthly payments once that forbearance period is over. Literally, the fate of the housing market lies on that number. If that number isn't high, we will definitely experience a significant drop. How many households will be in trouble when that day comes? How many of them will sell instantly or foreclose? How many desperate landlords will walk away from the rental business and sell as soon as they can to get tenants out to minimize their losses? The worst thing that could possibly happen to an economy is a panic. A panic literally makes any crisis 100 times worse. That's the point of having a central bank like the Fed to prevent such a panic, because it could push many multi-home owners to list their houses and get out before prices drop further. Once something like that happens, we're screwed. It happened once last year, and we got out of it by printing an unbelievable amount of money. I don't think the economy is ready for another round of printing trillions of dollars. The forbearance rate is twice bigger than it was in the last crisis. Imagine all these houses going to the market at once. That's why Consumer Bureau proposed extending the pause on the foreclosures until 2022. We're simply trying to postpone that scenario and try to at least minimize the damage somehow by then. Of course, I could be wrong and the Fed can go for another round of pumping trillions of dollars, because government debt is not like personal debt. When you or I take a debt, we can go bankrupt, the lenders can come after us, they can come after our assets, so either pay the debts or declare bankruptcy. But not in the case of the government, because it can't go bankrupt since the government is the source of dollar. If you are the one who is issuing the dollar and you have to pay back that dollar, then why worry? Of course, the Fed is an independent structure, but it's still part of the government in many ways. It just functions in a different way. But when too many dollars chase too few goods, inflation starts rising faster than it should, which is going to make the currency worthless, which is what has been happening lately. Low mortgage rates push too many people to buy houses, while the number of houses in the market drops significantly, which is causing house prices to rise too fast, which is what inflation is. It's impossible to make any predictions. We just don't have enough data to make any accurate predictions. I think the Fed is playing with the fire here. Everything points out to at least a correction in the housing market, and a badly managed correction could lead to a crash. But that's just speculation and nothing more. A correction is when the market falls by 10 to 20%, which is what most experts are predicting going to happen to the housing market. But it's very likely that some areas would witness as much as a greater drop, maybe even up to 30%. There are of course still some good deals in the market, because even during such circumstances you can still find a good deal, but it's going to be really difficult. But I wouldn't personally risk buying now. Why buy now anything when you can get a huge discount later? Why buy a house when you can give this video a thumbs up? If you have enjoyed this video, you will most definitely enjoy this custom playlist that I have created specifically for you that has our most popular videos in business, investing, and the stock market that could potentially change your life. And now, subscribe if you haven't done that yet and click on that bell button. Thanks for watching, and until next time.